crypto, both the good and the bad of it is that crypto's had a very strong research culture. But then at some point, the research results in more infrastructure to support more infrastructure for more infrastructure. And what I feel like is missing oftentimes from that conversation is, okay, how does this infrastructure and infrastructure support a consumer experience that the next 10, 100, a billion people might care about?
Welcome back to Total Value Unlocked, a new podcast from Hivemind, where we explore the technologies and ideas shaping the future of internet and money, and how we're unlocking their potential. I'm Matt Zhang, founder of Hivemind, and in this season, we're focusing on the backbone of Web3 blockchain protocols. Before we start, just a reminder, none of this discussion should be taken as investments or financial advice. Please refer to our website for more information or contact Hivemind directly for our list of investments. Today, we're excited to be joined by my good friend, Lily Liu, president of Solana Foundation. When Lily started her career in finance, she was a bit skeptical about Bitcoin and crypto. But like so many of us, once she's starting to dive deeper, she recognized the power and potential behind blockchain technology, and it resonates with her interests in governance and global economics views and so many other stuff. Since then, she's becoming a major force in the space, co-founding Earn.com, later acquired by Coinbase, and now leading the Solana Foundation, while also building Anagram, a blockchain investment firm. Lily, it's fantastic to have you here today. Welcome.
Thanks for having me, Matt. It's great to be here.
Awesome. Well, let's start with your background. You begin your career in traditional finance. As we mentioned, you were initially skeptical of crypto. Can you walk us through when you first encountered Bitcoin and what ultimately changed your mind?
Yeah, I started my career, to be honest, at the start of my career, skeptical about finance, and finance was skeptical about me. I was supposed to be a doctor. No one's surprised by that. And and I decided that I didn't think that was going to be the right path for me, but I didn't really have an option as to what I was going to do instead. So I had a lot of friends that spent a summer working in banking in New York or Hong Kong, right? Since I'd spent a lot of time with kind of academic and beyond that kind of personal interest in Asia, specifically China's development. So I thought, man, you could make $10,000 in a summer out of investment bank. They're like, well, it's a lot of hours. I was like, I don't care what the hours are. I'm going to go apply for that job. And I miraculously got hired at Morgan Stanley in Hong Kong. And I did that for a summer. I thought, okay, this is much more my speed. I didn't really know anything about banking or consulting, truly nothing. But, kind of seemed culturally something and kind of content-wise something I was interested in. So I worked at McKinsey, and then I worked at KKR, and then I funny enough, kind of had this long-standing, initially academic interest in healthcare reform in China, which is it's like a very interesting topic because, of course, China has evolved quite a bit from being, a communist society where public goods are, and healthcare is one of the core pillar public goods. So the whole idea of privatizing healthcare and sort of moving social goods into a more clearly privatized present and future was something that I'd studied, and I kind of worked on that for a few years. And I built a hospital outside of Shanghai called Yuan. And along the way, I heard about this thing called Bitcoin, and like many people, I think there was like the big price spike, right? That's what has attracted a lot of people, kind of like piques people's interest. What is this kind of ephemeral thing that goes from $1 to 800? That's what piqued my interest initially, because I thought, it's just like headlines, kind of read about it. And I thought almost certainly this is laundering drug money, right? And that's what people have thought for a long time. There's probably still some people who think that's what Bitcoin is. And I read the white paper and I thought, okay, this is not just laundering drug money. There's something which is very real here. And that was how I got interested in Bitcoin. And that was about 10 years ago.
Amazing. And could you share more about the philosophical framework of Web3 mentality, crypto, blockchain? Like, how that actually influenced your approach to work and outlook of the space?
Well, I think that the people who got into crypto, at that point, it wasn't even crypto, it was just Bitcoin in
Right.
2013. Ethereum didn't exist yet. I think Ripple was in the very early days, and there was Litecoin, there was Bitcoin, and that was basically it, right? And I think that in those days, the people that were attracted to crypto who were not into the sort of black market stuff were either in it because of the tech or because of the politics, or
Mhm.
some combination of those. And I think what was so sort of fascinating about it is this idea that you would have this, clearly the internet is kind of the foundational innovation of, last in this and next generation. And the idea that you would take money and scarcity, or scarcity and therefore money and other forms of scarcity, and make that kind of digitally native, programmable, and available to anyone on the internet is a crazy idea, right? Because we're so used to these systems where you live in this country and then there's the fiat currency, and that country has the flag and the anthem and their own money and their own airline, and there's like all these things that are aligned in a country. And that's just kind of like, and you have your own Olympic team and all these types of things and a seat in the UN, and that's just kind of the world that we work in. But then I feel like some of the kind of trends that we all have felt and are all a part of this kind of globalization of culture, globalization of community that started with the internet. Now that on the information side, now for that to be paired with the financial side is kind of crazy, right? And what does that do in terms of reforming kind of communities that have a built-in economic layer? It's pretty transformative, and that really is kind of starts with the literal kind of creation of this concept of the blockchain. But now, it's essentially scarcity, money, right? Financial assets that are available to really anyone, about 4 billion people today that can connect to the internet. And I think it's even now, like, I think we are really just the tip of the iceberg on what's possible with that.
Right. I mean, you also founded Anagram, a blockchain-focused investment fund. I mean,
Mm-hmm.
share with us, like, what also drove you to start Anagram? Like, was there
Yeah.
something missing in this space that you also wanted to address, through the fund length?
Yeah, so Anagram, it's actually more than a fund. We started off as permanent capital vehicle. So Joe, my co-founder, he used to be the president of Polychain. And when we got to know each other, I guess now over 3.5 years ago, we had a shared perspective on a couple of things related to crypto. And I think some of those observations are that it's a novel asset class, and let's talk about the factors of production, right? Traditionally, the factors of production are labor and capital, and how those different resources interact in kind of existing economic models is a certain way, but in crypto, it's fundamentally different. The loop is tighter, right? When things are public versus publicly, let's call it tradable, available, has a very different life cycle than traditional industries. So a lot of the kind of structures that I think that are tried and true and professionalized and all those sorts of things that separate sort of private investments from public investments, because typically they're 10 years apart, right?
Right.
It's 10 years to found a company to IPO. A lot of those things are structures that are built for the way the world works today, and they're built to serve that more or less. But then in crypto, it's just kind of a different thing where kind of illiquid to liquid is a much shorter time cycle. Could
Mhm.
even, it's essentially things are public, so to speak, at seed stage. So there's one observation. But then more importantly, the kind of the value creation levers, I think, are also in a tighter loop, right? So I think even in the Web2 world, you kind of pick, am I a 100% capital allocator, meaning investor, or am I a 100% labor allocator, meaning entrepreneur? And then you're either one of those, and then they match, right? You go raise money and all that type of stuff. And then kind of the deal is like, okay, well, the venture capitalist has raised money from allocators and then chooses to invest in this project. And then you as the entrepreneur sort of pledge your honor for $2 million seed round for at least the next 3 to 4 years. And that's the way it works. But then in crypto, I think there's a kind of different relationship between being an operator and investor.
Mhm.
And frankly, in crypto, I think a lot of the value that needs to be created is from building, not through investing. And in a way, I think our industry is highly levered to speculation when the work of all this infrastructure, including Solana going forward, is to be infrastructure for applications. So who's going to be building that, right?
Right.
And so I think that, to me, that's why we set it up as a permanent capital vehicle, so that you can build and you can also deploy capital, but primarily be focused on being able to deploy human capital in order to create value, rather than sort of a priori saying, okay, we're either an entrepreneur or you're an investor. That seems a little bit like a false choice to be making on day one.
Right. I mean, juggling two very important roles here, right? One as the founder of Anagram and the other as the president of Solana Foundation. I mean, how do you see these two roles complement and also contrast each other, I guess? Like, are you scratching different type of itches here, or do they actually overlap in certain ways?
Yeah, well, I think being an operator makes you a better investor. Being investor makes you a better operator. And a couple of ways that that kind of comes to light for me is you talk about one of those directions. I think being an operator, especially in this kind of very emergent space, where what it means to operate, for example, a layer one protocol as like a community, there's no role model for that, right? You can't
Right.
take like, I think it works fairly poorly to take a corporate model and be like, okay, well, here's what worked for Google or Apple or Amazon outside of, bits, right? And therefore, that's how you're gonna build a L1 protocol kind of community. I don't think that works very well. So one is kind of what does it even mean to be an operator, is part of it. But then I think being an operator, because it's kind of very emergent, then you kind of learn different insights as to what works. And whether it's on the people side, whether it is on the go-to-market side, whether it's also, on the technology side, what infrastructure is suitable for what applications, that provides, I think, a much more sort of nuanced perspective on where kind of value in this industry is going to be created, right?
Mhm.
And then I also think that, there's no secret that crypto is pretty fast moving. And there's like a pretty strong innovation engine, or at least sort of continued creation engine. I think the job of an investor is to be ideally consistently truth seeking, right? And to always kind of have an eye as to what is going to be created, should be created, that is going to be valuable. Or at least to have a perspective on that, and to also sort of be agnostic enough to look across different ecosystems, different tribes, if you will, because people are pretty tribal in crypto,
Or
and
city state, as you always like to
the
refer.
city state, right? And to be, the job is to be more truth seeking. And I think that also helps as an operator, because as an operator, classically, you've got your never ending to-do list, right? You've got a lot of tactical things to be looking at on a daily basis. This deal, that conversation, this partner, or whatever it might be, right? And to be forced to take a broader view and to contextualize what you are doing as an operator in the context of the larger industry, I think is quite valuable. Also because, we have a lot of fun within the industry, jibing at one another on crypto Twitter, right? Oh, this great tweet, that great response, those types of things. And so it's fun for us to be somewhat tribal, but ultimately, I think that there's a good amount to actually be learned potentially from other ecosystems, not in all cases, but in many cases, and being forced to take a broader view on that and kind of, take an operator hat aside for a second and be like, all right, if we just level set kind of on an objective basis, right? What is working, what's not? I think that's helpful.
Yeah. I mean, let's talk about Solana. Like, has remarkable growth since its launch in 2020, entering a space actually dominated by BTC and Ethereum. From your perspective, what's been at the heart of this rapid rise? What stood out to you about Solana, what you first joined that's actually stand out from everything else?
I started using Solana in the beginning of 2021. I was on Radium, and look, it was the early days of Solana DeFi, and there was a lot of fun to be had on chain, right? And So I was, liquidity mining a number of those pools, doing carry trades on most recent to launch token between DeFi and then between perps on FTX. So that was what got me interested in it. And that was, let's say 2020 is when DeFi summer started. This is beginning of 2021. So it's kind of like the first overall generation of DeFi. And it was really just the fluidity of the experience that I was using at that point. I think Solid Wallet was what was available. And but it just felt so fluid because you clicked and then something happened. And it wasn't sort of, abstracted and kind of like all these various layers to make it seem more fluid. It just happened, right? So the experiential sort of value of that 400 milliseconds while being a native blockchain transaction, I felt was very magical because that was the first time I felt that natively using a blockchain application felt like using the rest of the internet to me. And then I thought, okay, well, if we're all, we're us all being part of the self-custody tribe, right? Then what out there is going to expand the utility, attractiveness, the value proposition of this technology to the next 10 million, next 100 million, maybe the next billion people, and create a reason that people should care. Well, I thought, well, one starting point is it's got to be easy to use. And so it was pretty simple for me. That's what got me into it. And then I started to learn more about the community, and I kind of like the aesthetic as well. I'd had enough of like food related DeFi. And I wanted something that kind of had like, I kind of like the branding around it. I felt like it was more extensible, just the culture around it. So then I jumped into it. Chance ran into Raj and Trolley at a conference, and then started talking, and I thought, okay, well, help out Solana a little bit at first, and then that just continued to snowball into what it is today. So that was the very tactical origin of it. But what I also liked about Solana was, and is, this is what I've also really tried to support, is this idea we're building applications and we're building practical things that are going to add value to people. And thinking about infrastructure in the context of applications and products that matter. And I think that crypto, both the good and the bad of it, is that crypto's had a very strong research culture. But then at some point, the research results in more infrastructure to support more infrastructure for more infrastructure. And what I feel like is missing oftentimes from that conversation is, okay, how does this infrastructure support a consumer experience that the next 10, 100, a billion people might care about? It doesn't actually make it worse. And I still don't feel like there's a very compelling sort of perspective on that in numerous parts of the ecosystem. And that was also something that I felt like Solana had more of a culture around it, and I think still does.
And look, now, kudos to you and other team. Solana solidly sits at the third largest ecosystem, right behind Bitcoin and Ethereum. Many other layer ones have tried that in the past, but failed. What are some of experiences and lessons on breaking out from very competitive market and offer a very differentiated value proposition to both Bitcoin and Ethereum ecosystem?
Yeah. Well, I think I'm just one voice of many in the ecosystem and the community, so this is really just my take. But I think that you have to have differentiated technology, right? I think that you have to have differentiated technology and then also differentiated community and a culture, right? So two sides. There are a number of projects that have a differentiated community. They've done a great job on capturing hearts and minds and narrative and those sorts of things. But if you don't have differentiated technology, at some point it's only going to get you so far, right? So it starts off with Solana actually having differentiated technology and having what might seem obvious to a number of people outside of crypto, but within crypto was considered somewhat heretical. This idea that you would just try to scale mainnet as much as you can over time. So the network that keeps on getting better. And for those of us that have been in the Bitcoin world for a while, the idea that the core protocol would have a roadmap and continue to evolve and be a technology platform, more like a technology product rather than a digital gold kind of, the value is it being static kind of concept itself has been debated for a long time. So that was considered heretical, both that the network should continue to getting better, and then also as hardware got better, and then also that it would endeavor to stay on one chain. And so I think that is a big part of it. And then the performance that that results in. And I think, we as an industry oftentimes talk about the metrics such as TPS is a very literal one that people will point to, and probably the most common one when you talk about performance, either that or time to finality. And that's certainly one way to characterize it, but I think that is an insufficient way of talking about performance, because again, it should be connected to the experiences you can enable with that. So to me, it's like saying Netflix is the same company in 1995 versus 2020, when it's clearly not, right? Because it was a mail order company for DVDs. Yes, it's an entertainment company. It was mail order for DVDs when you couldn't stream video clearly into homes. And then with bandwidth later, 25 years later, 20 years later, then you could become a streaming company. And so to me, that's a better expression of infrastructure improvement over time, right? It's the fact that you can now have entirely new entertainment experiences, and who would draw an equivalence between mail order, DVD company and Netflix streaming? No one, right? So I think that's really, it's not just about, yes, we can talk about the TPS and finality and those types of things, but it's also really about sort of infrastructure for what applications is really the question. And so on that, I think that, kind of the culture around actually caring about that very explicitly is something that was interesting to me. But then also sort of creating a culture and a community around being a builder, which could be, a technical skill set as a developer or as a product person or as a growth person, contributing to the community. And I think there, this is a part which is a lot more intangible, because culture inherently is intangible. But when we think about the culture that, in my view, has been at the root of not just successful companies or projects, but really successful societies, it's a culture of citizens actively, proactively contributing and asking first, what can I do for the ecosystem? What can I give rather than what am I going to get, right? And that has the compounded effect of, generally speaking, growing the pie and attracting people who also want to help grow the pie. And so that's something that has been very important in the way we've thought about sort of building community, right? We say that Solana as a blockchain is proof of stake, but then the community is proof of work. And as we've been building out various communities, and as like Super Team developed, right? Super Team kind of bootstrapped itself off of a podcast, and the core kind of philosophy there was proof of work, and that people had to be able to earn money. And if you're earning money, it means that there's tangible value someone is paying for, and so the market is kind of validating, if you will, that contribution. And so that's been very important, because then it filters for people that are opting into contribution. And if you've got to have net contributors, otherwise you don't grow.
Yeah, I love the analogy and the way you phrase it. Like Solana may be proof of stake, but the community needs to be proof of work. I want to circle back to the community building side later on in the episode to discuss more about this. But on this topic, actually, our last episode's guest was Munib Ali from Stacks.
Mm-hmm.
And I asked him this question. I know he recently also attended Breakpoint. We'll discuss a little bit about monolithic versus the modular approach, right? Because a lot of the criticism about Ethereum's mainnet was the gas fee, and people think that you need a lot of the layer 2s to make it work. Whereas Solana is very proud and continue to scale the performance of its mainnet. So pretty curious about your take regarding the monolithic approach versus the modular approach.
I think that, most of the time people have that debate on with a technical perspective, which is great. The additional perspective I would offer on that one, in addition to the many technical perspectives of value accrual and and trilemmas of various definitions, is I think building network effects overall as an ecosystem. And that, again, I think is a little bit more on the softer than tangible side, but of great relevance, because if you as an ecosystem can keep your factors of production, right? Let's, to simplify it, people and human and financial resources co-located, then you can actually start to realize network effects around those things. And I think that is one of the things that is actually at an ecosystem level a worthy trade-off. And so, so early on, when there's been a constant refrain for a number of years now that Solana centralized because it's too expensive to run a validator. In reality, it's about 2.5 times the cost to run a validator, Solana validator versus, for example, Tendermint validator. So this is not, some sort of astronomical, insurmountable cost. Okay, as an aside. But the trade-off of that implies is that at an ecosystem level, put a little bit more of the burden on the validator versus the user. And even if that means it's a little bit more expensive and, higher maintenance, whatever, more work for a validator, if let's say today there's 1,700 validators, if it's only 2,000 of those folks and they're opting into doing that work, and the benefit of that is it creates a better consumer experience because you don't have to short sooner in ecosystems growth, right? Or in the kind of growth of demand for block space, then that's actually probably an ecosystem level, probably a worthwhile trade-off, right? And so therefore, I think when it comes to sort of fragmenting architecture, it's on one hand certainly about fragmenting architecture and the technical trade-offs therein. All I'm pointing out is that there's also ecosystem level trade-offs in terms of unifying financial and human capital in an ecosystem. And I think what we are observing to an extent right now in the L2 landscape is, I don't know how many L2s there are now. I think there's probably 50 or so. And of those 50, I don't know how many actually matter, but it's probably under 10, right? But then the L2s are competing against one another for liquidity and resource, so financial and human capital. And that creates lateral movement in the ecosystem rather than forward movement in the ecosystem, because it's always, the iterated game is always better played in the near term to try to go snipe the liquidity from your neighboring L2, rather than, collectively build, better infrastructure for applications, right? And I think that that is a very significant ecosystem level trade-off.
As Solana continue to grow, the foundation plays a vital role in guiding that expansion, which of course you help lead. Could you talk about your vision for the foundation's role within the network, and particularly, supporting projects central to the foundation's mission? What are some key factors you look for when deciding which project you back, and how do those decisions align with the larger vision of the ecosystem?
Yeah, well, I think to start off with, the mission of the foundation is to disappear. And we really do mean that. For us, success is that every year the ecosystem grows at a multiple of, or I should say, every year the role and importance of the foundation diminishes because the growth of the ecosystem outpaces, and we try to not actually grow the foundation. So that is the goal, and because that's kind of tried and true, the whole purpose of crypto from the beginning, that this is something that is kind of immaculate conception of Bitcoin as the ultimate example, and no one else has gotten to do the immaculate conception like Bitcoin. But that is Bitcoin obviously is very successful with that model, not without its trials and tribulations, of course, as one would expect. But that's the ultimate goal. So actually, I hope that 1 year from now, 2 years from now, 3 years from now, every year there's more of a shrug that foundation's not actually that important. The foundation is one player of many, and people hopefully care a little bit about the perspective, but the foundation is one of a diverse set of voices on any given issues. Now, what I think the foundation can be impactful with is, again, it kind of boils down to me. There's network, there's talent, and then there's capital, or let's say assets, right? And to what we were saying earlier, you have to differentiate a technology, yes. And then I think you need to have network effects around talent, primarily developers, because that's the most productive talent, kind of like the base level of talent that makes these ecosystems go round. Is having a network effect around talent, critical mass of talent, so developer community. There's any which ways that you can talk about that. And then once there's that kind of core developer group, then there's also that attracts builders with different skill sets, whether it's on the product side or on the growth side, right? The operational side. And then what's really top of mind for me right now is assets on chain. So building up network effect around capital, right? To me, the core use case of crypto has always been financial. To me, the financial layer within crypto is massive, because it's essentially, the vision is to build an on-chain economy that is useful and accessible to 4 billion people, right? That's like a never-ending project. So it's both foundational, and it's also necessary infrastructure for every other application vertical that we've ever talked about. When people talk about social fi, what's inherent in that word? Social finance, right? It needs an on-chain layer. Talk about GameFi, what's also inherent in that word is on-chain games with a financial layer attached to it. So I think the financial layer really is, that's where you can really also build as an ecosystem network effects. And so, I think that the last few years have been very focused on building developer ecosystem. You're never done with that, right? If you look at crypto overall, we're still a fraction of the global developer base. The Web2 developer kind of Silicon Valley, or Web2 developer ecosystem, just in pure numbers, like miniature compared to that. So you're never done with that. But now I think that there's more kind of line of sight to actual utility on chain, and why on-chain finance is useful for things that are even beyond trading. Then I think having diversity of assets on chain is the thing. And with assets on chain, some of that will be existing assets that get tokenized on chain. Stablecoins are essentially that, right? Stablecoins are a V0 of RWA. And then tokenized money market funds are the first step in tokenizing structured products. I know you're a structured products expert, right? To say the least. And so I think that tokenization engine is getting run right now, and there's going to be more products that then become represented on chain, which is coming through institutional rails, and I think that's wonderful. So that's kind of the existing bucket. But then what I think has also been kind of the promise of blockchain. In fact, I think without this, blockchain is not worth even a fraction of what we think it is the introduction of new assets and also new financial primitives that can only exist on chain. So there's existing versus new. And I think that we're at a point right now where a lot of the existing stuff is now being operationalized and actually being represented on chain. And, with some of the largest US institutions that have so much global credibility being very actively involved in digital assets, that's amazing. And then I think in the future, there's also going to be some interesting possibilities with new financial primitives around, like, PayFi is something we talk about a lot, and the ability to create new financial primitives around credit markets using stable coins, because at the very simplest, cross-border settlement can now happen T+0 rather than T+3, right? And implicit in that time value of money is essentially yield that can be redirected. And redirected for now, and then also over time competed out in the production of a more potentially more efficient kind of global market, right? So I think that those are examples of things that are sort of the existing, taking the existing asset base, which globally is massive, and then also laying the path for new financial products, new financial primitives, and products and experiences to also be built going forward.
I mean, well, you hear from Lily directly. If you're building a new primitive in financial services or trying to improving an old primitive in financial services, you have open invitation to build on Solana ecosystem.
Absolutely.
And I think in this role, you get to hear a lot from the builders firsthand, what they're really looking for in an ecosystem for them to build. Like, what do you hear the most?
I think there's such a range of things at any given moment in time. It's very crypto is very momentum oriented in both certainly like the price movement as well as builder energy, right? So some of the themes that I feel like we see a lot of right now, certainly stablecoin innovation. Now a lot of that is coming to market. And there's all sorts of different stablecoin constructs and designs and trade-offs and architectures, and a little bit more on-chain, a little bit more off-chain based types of stablecoin products. So I think that innovation cycle is now kind of bearing fruit. I think that there's a lot more to be done on the payments front. I come from a vantage point, and maybe this is kind of biased by my own interests as well, given my conviction around sort of the importance of the financial layer. I think there's a lot of things happening in payments, in commerce more broadly. I think that there's going to be another round of innovation on loyalty, on-chain loyalty. And I think institutional finance coming on-chain and building kind of more institutionally friendly products that also extend the markets available to those institutions, right, which is principally their motivation. Then I think that those, let's see, what else is there? Institutional finance, PayFi, right? That to me is new frontier in terms of new products around on-chain payments and programmable money. And then, so that's kind of all within the financial layer, right? And so many things within that, and DeFi, for example, like perp bonds, more perp bonds being built on chain, and a lot of new constructs there. Actually, I want to pick your brain at some point from a structured products perspective. And I think that I have a little bit of a thesis, not a very specific one right now, that there's moments in time when very talented when there's large talent pools outside of crypto kind of have an opportunity to get interested, right? So what I think that Solana also happened to get right by accident or on purpose in end of 2020, beginning 2021, was with the introduction of central limit order books that opened up the interest of the HFD trading community. And those are some of the most talented engineers anywhere, right? So what it meant is a lot of these talented engineers, some of the most talented engineers on the planet, came into Solana preferentially, and that was really great for the talent level of Solana. So I wonder, is like a lightly held thesis right now, but something you and I should talk about. There's a lot of really very sophisticated structured products talent. And if you were to reorient that talent and that thinking and into doing things with on-chain native products, I don't know, what would we come up with,
we need a whole new episode to talk about that, I guess.
That's going to be me interviewing you with a whiteboard. So I think that would be, as an aside, one thing that could be kind of on the new frontier. But really, I think that crypto has to be enabling 10x products and 10x user experiences. So to do the skeuomorphic thing, which is here's something that exists in the world and we're just going to bring that on chain, we should do that, but that is not the purpose for why we're all here, thinking that this is a $2 trillion asset class, if you even want to call it an asset class.
No.
So
this is a 10% better versus 10 times better debate,
yes.
right?
Yeah. So, the institutional finance stuff, I think what is definitively better, there's two things about it which is definitively better. One is that by introducing tokenized assets, you could potentially lower the transactable threshold from, let's say, a minimum of $1 million to invest in a private product, and now you could potentially do that for 100K. And so that's already been done through companies like Moonfair, and now that could be more broadly available because you have a more efficient backend, right? So that's one. Lower the barriers to transact, and therefore increase the potential sort of addressable market for any one of these institutions, right? And that's why it's good for the balance sheet theoretically. Okay, so that's one. And then the other is sort of introducing with the blockchain composability of different types of products. So you have tokenized money market fund, and now you can collateralize that in order to get liquidity for whatever else you want to do with it, right? and then more composable transactions on top of that because you have tokenized assets and essentially sort of all of the products of greater backend efficiency. So I think that is one area that there's so much depth in that. And I think that is both kind of timely right now in this cycle, but it's also something which is not just kind of hot this cycle. I think it's actually fundamentally useful. And I think, therefore, that as being a theme this cycle is different from the last 2021 cycle is very focused on NFTs, entertainment, creator, gaming, and entertainment-related verticals, which will absolutely come back. But I think that that was sort of early exploratory and kind of the equivalent of institutions getting to 2015 private blockchain finance, right? They go through 2015, they called it private blockchain. 2019, it was called securitization, and now it's called RWA. It's principally the same thing, but basically took 3 cycles to get to a place where, okay, like these things are actually useful and useful to a large number of people, even in the relatively skeuomorphic form. So I think it's, you know, it's been 15 years since Bitcoin came about. And so finally, there's going to be scale around, I think there will and should be scale around usefulness on chain. Like,
I mean, it's a good segue, right? Like you talk about a lot of different topics now and what's sort of trending. Like you just recently hosted the annual Solana Breakpoint, and which generated a lot of buzz. So again, congratulations. Like, what's the latest trend and development that sparked the most excitement during the events and during, among the community?
Yeah, well, the Breakpoint was first one in Asia, our 4th Breakpoint overall, our first one in Asia, which has been, it was a big highlight for me personally, right? As you know, I've been very invested in kind of building Solana's presence
Of course.
in Asia. And it was also our largest Breakpoint. And we wanted to, just kind of reflect where the ecosystem is right now and showcase all the amazing things that are happening. So we cut panels because, let's be honest, no one ever wants to listen to a panel. Okay. And we only had debates, fireside chats, and then also we had something like 78 5-minute product talks.
Mhm.
And so that's where everyone's showcasing a product. And that was the bar, right? You have to have a product which is new and that's actually shipping roughly around now to be on stage. And 5 minutes is like very digestible for basically everyone. And I think that it also just showed a lot of the like tangible progress which is being made. And so, a couple of themes that we wanted to really showcase during Breakpoint. One is that it's a network that keeps on getting better, which we talked about. It's infrastructure for applications. It's not infrastructure for infrastructure. So that's why the emphasis on product. And then also feature the fact that, I do think the financial layer is like kind of the star at the moment right now. So we're building an on-chain economy. And bring a bunch of assets on chain and making them sort of composable, programmable, right? That whole original vision of Bitcoin. And the other is that, Solana is here to help advance that original vision of Bitcoin that Bitcoin kind of decided not to do, right? Bitcoin more or less decided to be store of value, and that's great. It's $1 trillion now. It's going to be more than that in the future. But then what about medium of exchange and what about technology platform as kind of the 2 other contemplated paths for blockchain in the early days? If Bitcoin's not going to do it, that's cool. But then everyone else is effectively trying to do that. And so, that's how I feel like a platform like Solana is contextualized in the industry as a whole. And then, so the 4th theme we wanted to kind of to showcase is that Solana is for everyone, right? That's what Solana is here to do. And we're tribal about self-custody, but we're not tribal even about Solana. We're Solana rationalists, not maximalists was the tagline. And then lastly, Solana is global and Solana is about the community, right?
And talking about Solana for everyone, let's shift to the user side, right? One area Solana has a great reputation is for its retail-focused community, right? From gaming or GameFi, consumer apps, from Solana mobile to meme coins. Like, what attracts the retail community to Solana? Like, what do you think that you have done right compared from the other communities?
I think it's just usable. Sometimes people ask, what is Solana better at than some of the other large blockchains? And to me, that's a little bit like asking what on the internet is better on a 56K modem versus Ethernet? And I think the answer to that question is kind of everything. So I, I don't know. It's what I think. It's just more usable. So that was my experience at the very beginning. That's how I got into it. I just thought like, well, I could use this or that, and this one's intuitive, it's easier, I click and the thing happens, and great. It made my life a little bit easier. At least it didn't make my life hard, my life harder.
Sometimes simplicity is all you really need, right?
Mm-hmm.
Especially if you're trying to make
Yeah.
this adoption for everyone, like you have to making sure people easy to
Yeah.
use them.
I mean, most people are not so diehard, cyberpunk, I'll incur a UI cost in order to be maximally private and secure in all the things all the time, right?
Right.
Even those of us who take privacy seriously do value convenience above zero. And so I think that if it's easy to use and pleasant to use, it just has to be that.
I want to talk about Solana's role in that wider blockchain ecosystem, right? Interoperability has been talked about a lot. A lot of, developers out there that are building smart tools to actually bridging different communities. You often got compared to other layer ones, like Ethereum and Bitcoin ecosystem as well. How do you see Solana's role in that broader ecosystem? Is competitive or collaborative? Like, how do you sort of like managing the boundaries there?
Yeah, I think it's a sliding scale of collaboration. I think that because there's a very tribal tendency within crypto, I think the knee-jerk reaction that a lot of people will have is if you're not with my fill in the blank community, you're against us, right? And it's easy to react like that in kind of the daily sort of back and forth on Twitter, or I guess X.
Sure.
And so while I appreciate the sort of the fun of that and the play-by-play of it, I think in reality, I just don't think that the kind of long-term equilibrium state of the world is going to be one where there's a clear oligopoly, like Google won search and Amazon won e-commerce, at least in the US, right? And Facebook more or less won social media. I just don't think that's going to be the crypto kind of outcome, because the EV of building your own chain, forking a chain even, which requires little to no effort, is so potentially high that the kind of just the economic equilibrium around entry and exit is so different than in the Web2 world, right? So if you look at Bitcoin, for example, Bitcoin's $1 trillion. Bitcoin Cash is still $6 billion. Bitcoin SV is $1 billion. Ethereum Classic is $3 billion. And these are essentially some of the better known forks of Bitcoin and Ethereum. And I mean, that's like really significant market cap for what, right? And that's like very fundamentally different than if there's a Web2 company that essentially sort of goes into steady state mode, where they're going to continue to command multi-billion-dollar market cap. No, of course not. So there's just a very fundamentally different kind of thing, because
Right.
what these are is they're not a product of, these communities are not a product of your earnings. There's kind of inherent stickiness. I don't want to call it value, but like stickiness that gets reflected in market cap of communities. And once they're kind of there, they don't really disappear. They don't get shut down. They don't get sunset. They don't get deleted from a database. And so I think that to me indicates that the kind of market distribution of these communities over time, and they also trade places a lot faster, given the volatility, than in the non-crypto world. So with that, I think there's probably going to be on the order of, I don't know whether it's not going to be one chain that matters. I don't think it's going to be 10. It's going to be somewhere between 10 and 100. And if that's the case, then I think it has to be a much more kind of collaborative, fluid type of interaction between these different chains. And so this is actually an active kind of area of exploration and thinking right now, right? What does that mean to kind of have more or less diplomatic relations between different ecosystems? That's an open
Yep.
question. So That's the one that's being that I'm thinking about right now, and I'm actually curious if you have thoughts about that. But that's essentially what it is, like diplomatic relationships between ecosystems.
Yeah, look, as you said, city states, right? So diplomacy for city states sometimes involving collaborations and sometimes doing not so much collaboration. So I guess in the end, you have to really collectively grow the pie bigger, right? In real world, that's also the Earth's planet, but in sometimes knowing that it could be a zero-sum game in certain cases. It's just about balancing
Hmm.
which is the battle and which is the war, I guess.
Yeah. So, open question.
Yes. And
Yeah.
Lily, this podcast is all about unlocking the immense potential for blockchain technologies. And we obviously think Solana has a significant role to play in the future. Hivemind, we're a big supporter, as you know. As we wrap this up, we like to end with bold predictions, right? What's your boldest prediction for the Solana ecosystem? What do you think it will unlock in the next 5 years?
Solana is going to be the largest chain outside of Bitcoin.
Well, you hear from Lily firsthand here. So jumping into the ecosystem before that happens. But look, I mean, I think that's again, kudos to you, to Tolly, to Raj, what's been building in the last 2.5 years. Really create a lot of that momentum for yourselves.
Yeah.
So, best of luck, and I'm sure that people are looking at you and are thinking about how to use the ecosystem, use the support from Solana foundations, and really trying to grow, as you said, human capital, and then just asset-based capitals. And there's a lot of ingredients already there, and for people to really leveraging that helps, and sort of foundations support and trying to build something which hopefully will get to your boldest predictions, which is the largest chain in the next 5 years time. Well,
Yep.
once again, thank you so much for joining us, Lily. Can you at last tell our listeners and our audience where they be able to find you next?
I'm on Twitter like everyone else. I tweet a little bit less avidly than some of my peers. I'm CALILYLIU. So that's me.
Amazing. Well, so make sure you give a follow to Lily and hopefully seeing her in the next event you're attending. Once again, thank you very much, Lily, for joining us today and see you soon.
Thanks for having me, Matt.
Bye.